Are you being realistic about your views for recession and asset allocation, or are you focusing on what's helped and done well for at least the last almost 15 years, with the Fed being there to save you everything every time something went down? And that is, I think, the key question that investors need to ask themselves. And I hear it so much. Everybody keeps telling me, "Oh, you got to buy equities because the Fed is going to cut rates as soon as the market goes down." The Fed put is still there. That's what I like to point out in that piece you pointed out. Is I think the Fed put's gone, and let's give it a test. We haven't had a test.
Bloomberg Intelligence's senior strategist Mike McGlone took to Twitter to share the contents of a Crypto Outlook report. He argues that the launch of several Bitcoin ETFs, including BlackRock's Spot Bitcoin ETF, will not shield Bitcoin from facing its first U.S. recession, potential equity bear market, and hawkish central banks. The near-term outlook for Bitcoin is positive, but the key pivot point remained near $30,000 since 2021 amid the biggest money supply surge in history. He highlighted several obstacles that could potentially prevent Bitcoin's price from reaching $40,000. In response to the recent Bitcoin ETF-inspired rally, McGlone said physical Bitcoin ETFs in the U.S. are a matter of time, we believe. BlackRock's application to start such a fund appears to have expedited this process, but a launch may not come in 2023, and Bloomberg Economics expects the U.S. to tilt toward recession in coming months. Moreover, he believes the U.S. Federal Reserve continuing interest rate hikes this year, weak U.S. dollar liquidity, and Nasdaq 100 stock index reach its peak are major obstacles to the upcoming Bitcoin rally. McGlone also expressed uncertainty regarding the potential gold price rally in the future in comparison to Bitcoin. However, it's worth noting that with the inflationary pressure, both gold and Bitcoin have been touted as possible haven assets. Both asset classes have experienced significant growth in recent months, partly attributed to the ongoing banking crisis. McGlone's latest sentiment follows his previous analysis that indicated that gold would likely outperform Bitcoin in a recession, especially if it involves a stock market downturn. Let us now get into the video as Mike shares his outlook regarding the future of Bitcoin and gold in relation to the impending recession. Sit back, relax, and make sure to hit the like button, subscribe, and drop your comments as you watch. Enjoy.
So what I'm concerned about with Bitcoin is this is since the BlackRock announced their application for an ETF, Bitcoin's dropped from 25,000 to almost 28,000. That makes sense. Oh, about 10%. But that's still hopium. We have to hope to get that ETF. It's probably going to happen now because it's BlackRock. We're all in there, and everybody's thinking that. But if you look at Bitcoin versus the NASDAQ, that ratio, it's like 1.7 or so. It's the same as first traded in 2017. So I'm big picture macro bullish Bitcoin. But I think the problem is if I'm right about risk assets declining in a normal recession, cryptos are the riskiest assets. Bitcoin's the least risky. I think they still have a lot of downside risk based on my view of a serious U.S. recession. At some point, Bitcoin's going to come out of that and trade more like gold and long bonds. Is this the time? Maybe, but it's got to show me more divergent strength. Like today's one day, Nasdaq's down 0.2 and Bitcoin's up 4. That's one day. But overall, you look at Q2, Bitcoin's had a horrible quarter, and Nasdaq's been up. And why? Okay, so we've had we've had the SEC crackdown. Yes, that makes sense, but that shouldn't really hurt Bitcoin. It should really hurt the other cryptos, the other 25,000 that are just fully, way over hyped and speculated. It's just too much, seriously, speculation. I remember I used to see a lot of the trading pits. This makes those look that hype look like sissy stuff. So that to me is we need to get through that period, but right now there is not that ETF that people are bidding Bitcoin on, and it's the overwhelming macro that I'm concerned about. That if I'm right about markets just doing what they normally do in deflationary recessions, as indicated by the yield curve and commodities, and the Fed's still tightening, Bitcoin's still going to have some major pressure factor. Gold versus the S&P back over 100 years has been as high as, S&P divided by the gold is basically the mean is about 1.2. The high's been about 1.3, and it's around the low right now. S&P is like double the price of per ounce of gold. So here's one scenario for the recession I'm looking for. Gold pops to 3,000, S&P drops to 3,000. That's a 1-to-1 ratio. And if you go back 100 years, that ain't much. Needs to be pointed out. You don't earn interest in the gold. You don't have dividends in the S&P 500. You do that. I'm just pointing out the fact of the ratio of the two assets. The most significant measure of risk assets on the planet is the S&P 500, and it's maybe double the price of gold right now. As we head towards a recession, I think they're going to head towards one, which is not profound. I mean, 1-to-1 parallel ratio per ounce of gold, because that's almost always what's happened in recessions, and we haven't even got started, and the Fed's still tightening, which basically implies this is probably going to be one of the worst recessions in our lifetimes. Yeah, I think it's going to be right now. I look at it, my opening up my potential crystal ball. I think it's more likely gold goes to 3,000, S&P 500 goes to 3,000. Now that's going to see a lot of iterations, and that's the risks of making predictions. But this is what I see right now, and particularly because there's virtually no one who is bearish the stock market. I mean, they have been by the strategists, and that to me is where you should get good bear markets, is when you have a fundamental underpinnings for a very bad period for equities. If you just follow the rules of liquidity and recessions, of course, most strategists are smarter than I am. We'll find that out. They were a lot smarter than I was in crude oil until it peaked at 120 and it dropped to 70. I just was a little bit wrong and early, or both. It took a while. So here's a question I like to ask our readers. So how did all these, I mean, the top strategists on the planet get crude oil so long and commodities so wrong? How did they do that? What does that mean? It means they missed the demand pull, lack of macro demand pull for commodities. Now we're seeing this expectation that we're going to not have a recession, yet I think they're missing the same thing: the lack of demand pull and the overdue period for a decent stock market, bear market. We haven't had one since the bottom in 2009.
Bitcoin, Ether, and other major cryptocurrencies have exploded in recent weeks as the market braces for a $15 trillion earthquake. The Bitcoin price has almost doubled this year, sparking fears the investment window may be closing as traders abandon smaller cryptocurrencies in favor of Bitcoin and its nearest rival Ether, following a U.S. crackdown that some think is part of a plot to destroy the market. Now, as the world's largest asset manager leads a surprise Wall Street charge into Bitcoin and crypto, the International Monetary Fund, IMF, has suddenly softened its previous attitude toward crypto bans, warning they may not be effective. While a few countries have completely banned crypto assets given their risks, this approach may not be effective in the long run. Three senior IMF economists wrote in a blog post discussing central bank digital currency, CBDC, adoption and crypto regulation. China cracked down hard on Bitcoin, Ether, and other cryptocurrencies in 2021, expelling Bitcoin and crypto miners from the country and briefly crashing the market before crypto companies established themselves in the US and around the world. The IMF has clashed with El Salvador since the country gave Bitcoin legal tender status in 2021, warning of underlying risks to financial integrity and stability, fiscal sustainability, and consumer protection. Earlier this year, the IMF said that outright crypto bans should not be ruled out and called for a coordinated response to the rise of crypto that it warned could undermine the global monetary system. The IMF's softening stance toward crypto comes as the U.S. embarks on the crypto crackdown in the wake of 2022's market downturn that wiped away $2 trillion of value and culminated with the implosion of major exchange FTX. Bitcoin and Ether both surged this week. The world's biggest cryptocurrency shot up 18% to its current price of $30,687, while the biggest runner-up rallied 12.7% to trade at $1,893 at the start of the weekend. Investors flooded into other cryptocurrencies this week as well. In fact, most of the top 30 cryptocurrencies by market cap shot up by double-digit percentages. There were no losses among the major unbacked coins. Bitcoin for Bitcoin Cash, BCH, ballooned a staggering 80.5% over the last 7 days and currently trades for $192.67. While all eyes were on the SEC and big asset managers this week, there were a couple of other stories that indicated the steady adoption of crypto is continuing around the world. In the United Kingdom, a central bank digital currency, CBDC, trial project backed by the Bank of England published its findings, concluding that a centrally issued sterling-pegged digital currency could enable a robust ecosystem to foster innovation and to help meet the future needs of a more digitalized society. The project, dubbed Project Rosalind, emphasized the programmability of crypto through smart contracts, which facilitate automatic payments and enable new kinds of online transactions. On Monday, British parliamentarians in the House of Lords upper chamber voted through the Financial Services and Markets Bill, a piece of legislation that proposes regulation for stable coins, crypto, and crypto promotion. The bill has already passed the House of Commons and has made it through to the final stage, the consideration of amendments, where both chambers debate the proposals and tighten the screws until they both agree. The final stage requires a signature from King Charlie himself. It was reported on Tuesday that Germany's largest bank, Deutsche Bank, applied for a digital asset custody platform license with the German finance regulator, the Federal Financial Supervisory Authority, BaFin. During a semi-annual hearing on monetary policy held by the Republican-led House Financial Services Committee and led by Patrick McHenry, RNC, on Wednesday, Fed Chair Jerome Powell said the U.S. central bank should play a robust federal role in crypto regulation and added that Bitcoin has staying power, while implying the same about stable coins. Finally, XRP progenitor Ripple was granted an in-principle payments license in Singapore. Ripple has long felt the heat from U.S. regulators. A lawsuit against it by the SEC has been ongoing since 2020, and like Coinbase, the company is now hedging its bets through global expansion. Do you think Bitcoin will revive all other cryptos in its wake? Let us know your thoughts in the comments section below. Also, remember to hit the like button, subscribe, and turn on notifications.